Alright, so hello everybody, welcome back to the channel. I hope you're doing well. Today I'm going to explain to you how these wars that are ongoing, how wars literally affect the forex market. Now, of recent, we have actually seen a lot of wars happening. Now, recently, we have what you call geopolitical tensions in the Middle East, right? Now, recently, geopolitical tensions in the Middle East escalated after military strikes involving the United States, Israel, and Iran. And these attacks triggered what you call retaliation and increased instability in the region, right? For example, now I remember well this conflict between USA, Iran, and then Israel. They started around, it was around 29th of January. That is when I had my good trade here. And you see, I got kicked out, right? So what does this mean now? I remember when then Iran responded with a missile and drones that attacked the US base uh, and allies in the Gulf region. If I remember well, what happened is that I saw something like this going viral because what we saw is that now the market that happened here was. The logic that happened here was the strikes were happening and there were a lot of political tensions, right? So when you're a trader and you understand this, it becomes easy for you to know that the markets are going to be very, very crucial because you see now I have been having a series of losing streaks, and it is because of that war that caused these streaks, right? So now in the Gulf region, there is what you call oil supplies. There is what you call oil prices that are going to be usually all the global countries are using like supplies from those regions. Like oil is going from that region to different countries, right? So this affects the forex market because now we have what you call safe haven assets, right? So when political tension like was a spike, what is happening is that now we have what you call safe haven assets, and that is the that is the USD, that is the gold, and then that is the JPY. So we as traders in the forex market, what happens is that now a lot of people are going to put their money into these. They are going to take their money from liquid cash to these assets, right? So when we see a lot of tension that is increasing, what happens is that now the investors become uncertain. They are not sure what will happen. It could be World War III, it could be anything, right? So they are curious about what is going to happen, and they know that their money, the physical cash, is not going to be safe, right? So what do? They get their money and they do try to at least this uncertainty creates volatility in the market, and because now gold is moving in a way that is unpredictable. The USD is either strengthening or weakening, and big candles on the charts are going to be forming because of that thing. You see, these long red candles, I had a beautiful setup that I was trying to take here. Price came and wicked me out, right? So, what does this mean? This is as a result of political tension. And if you observe well, yes, I have been having some good trades, but one, two, these were losses. I lost two trades in the same day. So, due to this political tension that always happens, right? I remember, yes, I got a good trade here, but if you observe well, ever since January, I hope you can see down there, ever since January 28th, I have had like, let me see, one, two. I have had a series of losses, and these losses are not coming from like normal price action. They are coming as a result of what we call geopolitical tension and these wars that are ongoing, right? So these wars have made me lose more money than because you're following structure, and structure is being violated by long momentum candles, which cannot even be predictable. So if you're a trader, that you need to understand that these are going to be normal, these are natural, and wars are going to always affect your trading. You have to be able to accept that at some point now imagine, I remember there is a trader who didn't use a stop loss on this trade. Let me show you. There is a trader who didn't use a stop loss, and if you see well, we had taken a buy, and imagine 0.01 lot size making you lose about 2000, 0.1 lot size making you lose about $2,500. That is crazy, right? So it was as a result of this trade here that we took, and it was this trade that we took in a way that price came down with long momentum. So she had not set a stop loss from here, and this whole week put her in a loss of about, this is $2,500. Imagine, and then she had two positions, so she lost about $4,000 in just one movement, which is very crazy, right? So these political tensions can make you lose money abruptly. So it's better you still at least. That's why I encourage traders to always use risk management at all costs, because you never know what is the next move. You never know what is going to be the outcome, right? So these two trades were lost in one day. Imagine losing two trades and then the market keeps dumping, and then yes, it changes direction. Yes, I got a good trade here because I at least I recovered the losses here. But ever since then, if I'll be honest with you, because most of the traders won't show you this, I have been having losses on XAUSD, and even if I have normal price action, at least I'm going to lose because of those crazy weeks. There are weeks that are happening, and this is normal because that's how the business works. Political tension was affect the forex market in that way. You are likely to lose a lot of money. The main goal that can simplify your trading is to manage risk and stick to that. So if you're one of the traders that doesn't use risk management, this is not the right time for you not to use risk management, because we are having a lot of political tensions. Iran, we have strikes on bases. We have seen that a lot. So be careful when you're trading. At least have that aspect of let me manage risk, because there is a lot of uncertainty nowadays. So if you can be able to do that, then trust me, you will be able to have good trades, and it is going to be helpful for you, and nothing is going to happen to you. You're going to lose at some point, and then you're going to recover, because if you apply now, you see this by risk management. I lost two trades in a row, but when I made, let's say for example, I was risking $1,000 on this trade. What happens is that now, this first trade I lose 1,000, the second trade I lose 1,000, then this third trade, which was a good one, what happens is that now, uh one trade of it I'm risking 1,000 to make 3,000. So on one trade I make 3,000, then I scaled in a position which made me an extra 2,000, right? So I lost $2,000 here, but I made 5,000 this side, so I'm still in profits of 3,000. So that 3,000 was taken away by these three trades. So now I'm back at break even. And that is the reality of trading that most people won't teach you and most people won't show you. But this is how the market does. And if you can be able to understand how to avoid these wars, because it's not like you're perfect that you're going to get good entries, no way. But if you can be able to use a stop loss, even if the tensions arise, even if they impose a lot of tariffs on China, even if they increase a lot of wars, you are going to keep stuck to the market. You're going to know what you're doing. You're going to get glued to the market and have proper price action. Imagine I was not using risk management. Imagine I was not using stop loss. I would have blown these accounts, honestly. Let's be honest, because you cannot have one loss. You cannot have two losses, especially on gold. Let's say a full margin trader now. Let me tell you, the reality is that now a lot of full margin traders blew accounts, but nobody's going to show you that. They blew a lot of accounts because even if you had a perfect setup, I want you to take a look at how these candles were forming, right? Take a look. This candle was forming as a rejection, pushing up, first coming back down. And as it pushes down like this momentum first push all the way down before the candle closure, because this is the 1 hour time frame you see down here, the 60 minutes, right? So losing money is guaranteed in trading, but I don't want you to lose money like any person who doesn't know how to trade, right? Lose calculated money. That is what we call risk management, right? So that is the importance of risk management. A normal professional trader, yes, might have a losing streak, but still come out as a profitable trader, because you are trying by all means to survive. You are trying by all means to be able to be that good trader who's at least trying their level best, right? So I survived being a professional trader in a way that I didn't blow accounts despite the harsh market conditions that were here. Imagine now, even if you take a buy here, price comes back and wicks you out. You take another buy, price wicks you out, comes back up. So it's like there is a lot of manipulation that is causing all this, right? So your job as a trader is not to try to catch every move. Wait for those setups that are always forming, or that fit your trading plan. Don't try to be perfect. Don't try to be that perfect trader who's getting every move. No, you're not perfect, but I guarantee you're going to make money if you're using proper risk management. Trust me. So don't be that trader who's not using risk management. Don't be that trader who's going to be blowing accounts day in, day out, right? And I strongly believe in you. I know you can do this. So losses are normal. Even the big traders lose money. You can see that. This is one, two, three, 4, 5. I have 5 losses, but I am a profitable trader because I have what we call proper risk and reward ratio. I can recover easily, right? So be that trader who's taking quality setups over quantity. So if you found this video valuable, please don't forget to subscribe, and we shall be I'll be posting more of this. And yeah, so I guess I'll see you in the next one.